Easy. Easy. It's good, Melvin, Mitchie, Slicer, Justin. What's good, boys? How we doing? We took shorts. Mitchie model took shorts. Alright. We're looking good. We're looking good. Let's see if there's more people here. I should announce it a bit earlier sometimes. Next time. M was good. Yeah, that's a good one. M, what's good? How you be doing? Well, wait a minute or two. You're crazy, bro. Fully respectful, of course. 100%. All right, Michi, let's lock it on to the class right here, boys. Like, man, was good. All right, I think we should be ready to start. Who here knows what an SMT is? Who here knows what an SMT divergence is? Across pairs, yeah? There's a sweep on ES or NASDAQ, not and NASDAQ. Super important here. Holy drop. Yeah, we're dropping a lot. Hey, hold on. We've hit our levels right here from the stream, though. Oh, shit. What happened? We've hit our level. It went well. It's going well. Stop loss would be hit, though. But yeah. SFT divergence is a sweep on ES or and not on NQ, or on NQ and not on ES. Okay, such as right here. What do we have right now, right? We have the session low that is right here, right? And then we have a sweep right here, right? But if you look at the session low on an ES, it is not swept. So would that be considered an SMT or no SMT? That would be considered an SMT. Now, how do we play with SMT? Do you guys know? It's a sign of reversal, exactly. It's a sign of reversal. So when we do tap into an SMT, right, like right here, that would mean that ES will be ready to go up, right? Why? Because it's the lagging asset, which is quote unquote the strongest asset right here. The one that doesn't sweep is the strongest asset. So let me make you a quick drawing right here of the two assets right here. All right. So let's say we're looking for shorts, right? Right here, right? We notice that we're going to have ES right here, and we're going to have NQ right here, correct? Now, right here, we see that ES sweeps the high, right? Creating right here a SMT, of course. Oops, I don't even have my things anymore. A SMT right here because ES swept the high. Now we see that NQ hasn't swept the high. Is that still an SMT? Of course it's an SMT. Now, which asset would we take the trade on? Have a good day, Michi. Thank you. Okay, let's say Justin and M. Which asset will we take? Will we take a trade right here? Anybody knows? Anybody knows? Anybody knows? Maybe, maybe not. Come on, guys. Yeah. Come on, boys. Which asset will we take the trade on right here? Let's see it. Who swept? No, it will be the one that hasn't swept. So ES, NQ would be the one that you pretty much. Sorry, let me just turn on my volume. NQ will be pretty much the one that you trade on because it's the one that's lacking, aka the strongest asset right here. So you would take a trade on this. Now, how to utilize SMT? Well, fairly simple. You're going to have a fair value gap right here, right? Most likely a bullish fair value gap that's going to be printed. And then on the close, you're going to take a short on the inversion fair value gap, which we did have a class about this a couple weeks ago, right? So next week there's going to be no class, by the way. And then boom, you take the trade right here, right? That's all there is about an SMT. Let me make you some example on a high time frame SMT, essentially, so you can see correctly. Let's go on the 1 hour right here on both assets right here. All right. So right here, let's look lower a bit. Let's actually look at the 15-minute. It's gonna be easier to find SMTs. Let's remove all this right here so it's less confusing. All right, less noise on your chart, the better, of course, as we know, guys. Okay. All right, remove this. All right, let's see right here. Let's try to find an SMT, right? Now they're quite different right here, but you can see clearly that right here, NQ swept the high, right? And ES, well, it just didn't right here, right? Now, what is this? That is a bearish SMT, correct? Why is it bearish? Can anybody tell me? I guess it was good. Because bearish SMT, yes, it's an SMT because ES, NQ swept and ES didn't. So therefore, what would you do right here? You see a high time frame SMT, you drop down into the 1 minute right here, boom, drop down into the 1 minute right here, and then you see that the sweep was happening right here, right? You can now look for a short, as we were talking about a bit earlier, right? I was talking about inversion, right? So boom right here. Where's your first inversion? Well, your first inversion for value up is going to be right here. Sorry, right here. You're going to put your stop right here, then you're going to place your stop UTP at the lows right there, essentially. All there is to it to SMT, essentially. It's a super, super, super powerful confluence. Any of you guys have ever used SMT before? I use SMT on the daily. We used SMT this morning for the T model. It was super good. But yeah, well, how do you guys think? What you guys think? Sorry. Really? How have you been using them before? If you don't mind me asking. You don't? Okay, okay. Valid. I mean, to each your own. I use them not on a daily, but I use them a lot. Does that make sense? If it pops up on my indicator, I use that as a confluence. I don't even look at ES. Okay, so you guess that there is an SMT on your thing then. Why on the daily? I mean on the daily. I mean at tous les jours. I don't think I've ever split screen as ES, and you should, bro. Especially for the T model, you should 100%. The SMTs are so damn important. Now right here, I'm looking at the 1 minute, right? Do we have an SMT on the 1 minute right now, or no? Yes, we do, right? We have an SMT right here where we see that low has been swept on NQ, but not on ES right here, right? Or almost not on ES, right? It actually has been swept, but let's take that one right here, right? You can kind of tell that there's an SMT, right? So SMTs are super, super, super important. In my opinion, it's one of the strongest confluences because it's like a liquidity sweep, but it happened on a other asset, another asset that follow itself, follow each other, such as US30 and RTY. Now we won't be able because I'm delayed, but US30 and RTY, they both follow each other, meaning that you can take Ali and Eric, was good, that you can take a trade with SMT using RTY and US30. So let me mark that into the chat right here. Hey, was good. US30, RTY, right? NQ and ES. These are going to be the ones. Yo, what's good, Lee? How you been? These are going to be the ones that you are going to need to look together, if that makes sense. Now, any other ones that you, that's what I was going to. What about the other ones? Right, we got Bitcoin and ETH, Ethereum. Right, so we could look into Bitcoin. I'm not going to switch them, but Bitcoin and Ethereum, they move together, right? But these are the assets that we trade: NQES, RTY, and US30. Right now, what about gold? Do you guys know which one is in correlation with gold? Silver, exactly. Silver. Fairly simple, right? Now, DXY, what is it correlating to? Negatively. Oil, is oil, gold, the Nasdaq as well. US dollar is pretty much correlating in negativity to everything, if that makes sense. Which we don't use SMTs on, but the SMT is so important. Now, another correlation that's important is going to be oil and the Nasdaq. Sometimes you'll see the Nasdaq sharply move down. What my first intuition is, go to oil. If oil is pumping super hard and Nasdaq is going down, I know it's fundamentals and it's nothing to do with current actual market structure. It's fully fundamental, meaning war, Trump, shit like that. You know what I mean? So that's an important correlation. But as far as SMTs go, do we have any question on SMT? Yeah, that's what I do. Every time there's a sharp move, I go directly to oil. We can have the session indicator right now, actually. Okay, do a screen recording. I'll wait 5 seconds. There you go. That's the SMT nuggets. It's mean smart money techniques essentially. Hey, what's good, everyone? How you doing? Doing good? It's basically when an asset takes a high and the other one doesn't. Let's make an example again on the drawing tool right here. So we go on to this right here. Right? We were talking about ES and NQ, but let's make it different. Gold. Tabarnak. Gold, silver, right here, right? So we have two correlating assets right here, right? Boom. Yep, Juice is not in here. He's not locked in. So we have two assets right here, right? Now, SMT, smart money technique, will be meaning that the banks will be pushing the price lower on one asset, such as right here, where we have gold, right? They have pushed the price lower on gold, while silver is still up. That means that they are trying to trade silver because silver does not need to move and get that low right there, right? So it's a liquidity sweep on one of the two pairs that are stuck together, if that makes sense. And what do? We look such as the iFVG class that we had right here for longs off of an inversion fair value gap right here. And then we put our stop right there at the bottom of the SMT and blah, 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 blah. So, all right. You have a good day, man. Okay, what's good, my man? How you doing? 30 plus 30. So, was that understood, Nuggets? Really good question. It's important to know, of course. Any questions on the SMT right here? I'm going to give you guys a homework as well. Homeworks are important, in my opinion, within these classes. Every time we do classes, whether it's in here or in the inner circle, yep, there's going to be a homework. Try it one more time. On the charts or on, you're gonna find me? Hey, I won't hide for too much. Don't worry. Chart example, okay. Yeah, it's because I'm French, bro. Okay, so let's make the other example on the chart right here. Okay, so let's remove all that right here, right? Let me look for one first. Right here. Give me just 1 second, boys. Actually, I know where to go. All right, so we see right here that we have a wick right there, right? This wick right here being that wick right there, correct? Now we see that we have a wick right here on ES and we have a wick right here on NQ, correct? Now, a lot of people were bearish to that wick right here because it's a data wick, but they did not take into consideration that that NQ and ES had taken it, but NQ hadn't, right? Meaning that we had a bullish SMT right here. So you can clearly see that ES right here, NQ, sorry, is still open, right? While ES has been swept right here by this current candle that is right here, correct? So that is going to be what? What kind of SMT this is going to be? Yeah, it can be the homework checker, of course. Was that a good example right here? And what kind of SMT would that be? SMT pushing where money is pushing, because for me looking at that I see its constellation, and whatever it breaks constellation, that's where money is going to be heading with my knowledge. Nah, not really. SMT is just a liquidity sweep on the one asset that is correlated with another, and the other that we're talking about has not swept it. So imagine this, right? Hmm. Yeah, it's hard to make a life example, but it's really just about this example that we had right here with the with the uh with the chart at the top where one asset sweeps. I'm going to send you a PDF after this as well, so you'll understand better. It's like a 20-page PDF. But one asset sweeps, the other one doesn't, giving us a SMT, such as right here. If we look carefully with the indicator, sorry, almost died right there. Right, it's going to be easy to tell right here because we're going to have color. But you can see that the market sweeps that high and it does not get swept on ES, right? That just means you can short on NQ, on ES right here. That just means you can short this one, realistically, right there. To break it down very simply, Nick was good. It's basically liquidity sweep, meaning if ES sweeps high and NQ hasn't, that's a bearish SMT on NQ. NQ didn't sweep, so it's the strongest one. Exactly. But do we understand this example that we're seeing right now on the chart? Yes, okay. What about you, Nuggets? Do you understand this one right here? Where we can short on this one? You can short NQ as well. ES is just the one that's lacking, so it's going to be better. If that makes sense, aka the strongest. But you can short NQ as well. I mean, they're supposed to follow each other, right? Yeah, of course, of course. Let's see if well, that was understood by Nugget. What about you, M? Do you have any questions? On the left side, it swept the highs, and the right side, it didn't, forming an SMT divergence. They're pairs, sorry, so price should be nearly the exact same. That's why it's a confluence. Exactly, so it's a confluence because they should be the same, but they're not the same. And we do have a liquidity sweep on one of the two assets, essentially. Does that make sense? Fucking goofy. Kingston, ladies and gentlemen. That's your president. Any other questions on this, guys? What's up? Other than that, I'm going to send you guys a PDF right here for you guys to study if you want. This is gonna be interesting. Give me a second here. I'm gonna send the PDF in a bit. So I'm gonna send a video. It's an unlisted video. This right here, and I'm gonna send a PDF as well. All right, so we have a video right here, and we have a PDF right here on the SMT divergence. If you guys want to look into this and study it, it's going to be super good. So we have a full video right there on YouTube and a full PDF on the SMT. Would you guys like to go over the PDF together? No? Okay, okay. So let's go over the PDF together then. All right. So let's go over the PDF together. SMT PDF. What is an SMT? How to spot one. Fairly simple, right? How to identify an SMT price on chart. See picture right here. How is it every SMT valid? No. Do I need the daily bias for it to work? No. Does SMT work on all time frame? Yes. Should I combine SMT with other confluence? indicator or trade them separately, pair them with iFVG, order blocks, etc., etc. You can clearly see right here that we have a high, right? And we have another high taken on either one of the assets, and we have a high and a high that has not taken that one, creating a bearish SMT, correct? And we see that the market plummets afterwards, right? The example right here, right? I've marked out the time right here, 11:55, 11:54, 55, same thing, right? 125, 110. We understand it's the same area, right? But you can see clearly that between these two right here, this high gets taken by this one, while this one does not, creating a bearish SMT, which is that example that we have right here, right? ES and NQ are both US indices, and typically, right? Typically right here, because if it's untypical, that's the SMT that we're looking at, move in the same direction. SMT divergence occurs when one makes a higher high or a lower low and the other one doesn't. Let's have a look, right? Can you spot the difference right here? Can you guys spot the difference on that one? What's good? Yes, okay, okay. Nuggets, Nuggets, Lee and M and Saha, can you guys spot the difference right here? Easy, too easy. Yes, okay. Nuggets, Lee and M. Yes, okay. I'd have to study OT more. Which one's higher? Yes, that's the difference essentially. So that's what an SMT is. That's all there is to it, right? What's the difference between a bearish and a bullish SMT? Let's dive in, right? So bearish SMT, we see on NQ we sweep the high, while on ES we don't. Sorry, Jesus Christ, I'm cooked. Which pair is the strongest right here? The strongest pair here is ES, believe it or not, right? Because it didn't go higher, it went lower. Why is ES stronger? It's moving slower, so it's stronger right here. Let's make a real life example, right? Two runners, NQ sprints ahead to cross the line, burning all its energy to get there. ES holds back, save its strengths. Now that the move is over, ES is fresh and ready to drop harder, while NQ is still gassed out, right? Let's say it's you go and then you come back type of race, right? The one that sprints to go is probably going to become it's probably going to come back last, if that makes sense, right? Same type of example right here. Now we see right here that we have NQ that overextends while ES doesn't. Which pair would be short right here? Low-key, just SMT works super well. But can we see the difference right here? And which one should we short? Yes, okay. Yes, we should short ES. Correct. Now, bearish SMT right here, right? Pretty simple. Now, bullish SMT. I kind of messed up right here, but we see that NQ did not sweep while ES swept. Is this bullish or bearish? Let's go, Kingston. I know what it is, but I won't say it. Bullish. Yes, sir. It's bullish right here. So fairly simple, right? Now, it's the same thing right here. The strong pair here is NQ. Why? Because NQ did not overextend. So real life example, it's a go back and forward sprint. If you sprint quicker than the other one, you're probably going to get last at the end, right? Unless you're super, super good. So it's the same thing, right? ES rushes ahead at the top of the hill out of red and goes at a slower pace, but doesn't tire himself. Now that the move is over, NQ can turn back, head down, up on this example, with ease, while ES struggled to recover the climb, essentially, right here. So, fairly simple. So here's an example right here. Which asset would we long right here? The bolt will go up, yes. Exactly, it's a confluence to show that it will reverse. So the one that does not overextend, right, will most likely pump back up a little less. But which one will we long right here? No, we would long NQ because NQ did not overextend, right? With the example that we have right here, ES rush ahead at the top of the hill out of red. NQ goes at a slower pace, right? Which is right here in our example, but does not tire himself. So when it's time for NQ to go down the mountain, well, it's going to be much quicker than ES, right? Right here. so much higher. So we long NQ essentially. I love Shambo. So we would long on NQ essentially. Yeah, bullish SMT. Notice how NQ pumped more right here, right? NQ pumped way more because it did not overextend, if that makes sense. Interesting fact, why NQ is the one that overextends the most? NQ is made off of high growth tech stock like Apple, Amazon, Nvidia, which are naturally more volatile, right? So NQ is most likely going to make the SMT rather than ES, right? So ES will be better to trade, if that makes sense. ES tracks the S&P 500 mix of 500 companies across many sectors, healthcare, banks, energy, right? The bank ones are pretty stable, so you know what I mean. They don't really move the market that much. This diversity slows down the volatility because gains in one sector are often balanced out by losses in another within the S&P 500, right? Was that understood? Well, that's a good question. I don't trade ES. That's something you should ask ChatGPT, to be honest. I don't really trade ES. I really don't trade ES. I'm sorry. Important things to know. SMTs are valid on all time frames. Yes, you can also use SMTs from the Dow Jones, which I haven't gone over because I don't really use them. But the Dow Jones is US 30 essentially, right? So you can use US 30 for SMTs on NQ and ES as well. Do not use SMT as your own confidence. Although you can, I would not recommend it. But that's pretty much all there is to SMT. Does that conclude the class? And do we have any question, guys? This will be recorded. You can watch back on YouTube if you want. Of course, 100%. But does that make sense, guys? And is there any questions? I'm ready to answer some questions here for sure. 100%. So they both are sweeping on the downside. What doesn't go past the what? Yep. Yep. What's your question, Kingston? Why do you wear glasses? So one of my eyes is bro, I'm four-eyed, bro. One of my eyes is twitching and I can only see from half of it. Therefore, I'm blind. And my other eyes is fine, but it's also blind, if that makes sense. So yeah, pretty much. Is there any question, guys, about the markets? Fucking shame, bro. Yeah, if you have questions, send me DM. Don't be afraid. 100%. Yeah, the shame as well. Want to DM shame? Why not? But alright, guys. On that, we're gonna go here. This was a super good class.